Hello, my dear friends. Very good evening. Very good evening. I hope I'm completely visible and audible for all of you guys. Can you please confirm once that I'm visible and audible so that we can comfortably start our discussion? Yes, wonderful. Good evening. So happy to hear that it is crystal clear. I wish that the same will continue till the end and we'll have some great round of understanding on the balance points which are pending. Are we ready, my dear friends? Shall we start off? Done. So, friends, in the morning, we have been discussing about the interesting concepts about that is income tax amendments for November 23 examination. In the same way, some interesting amendments are there even in GST also. And with respect to income tax, last one point was pending and that voice was not clear for you in the morning. So I would wish to reiterate the concept once again so that you will not miss out on the points. So let me share the screen and open that document to you guys. Just give me 1 second, I'll open that. Yes, I'm pretty confident and sure that the screen is visible for all of you guys. Yes, my dear friends, come on, thank you so much. So friends, see that point, my dear friends, once. See, this point basically talks about linking of Aadhaar with PAN, where I was talking to you in the morning that government, what they told is that on or before 31st March 2022, they clearly gave instruction that every person must link their Aadhaar with PAN. Basically, an OTP will be sent to the mobile number given in Aadhaar so that Aadhaar and PAN will get linked. And what they told in the law is that if you don't do this activity by 31st of March 2022, then after that, you are required to pay late fees of 500 rupees up to 30th June 2022. And post that, they told late fees is 1000 rupees. This is what they clearly told in the law. Apart from that, what they told is that if you don't link your PAN with Aadhaar, your PAN will become inoperative. Here, the significant point to be noted is that 31st March 2022, they extended till 31st March they extended till 31st March 2023. And after that, they extended till 30th June 2023. In fact, that is a point what I was talking with you in the morning, where you can see here. And what is the consequence when you say that PAN Aadhaar will not get linked? It will become inoperative. What does that mean? You cannot claim any refund. You cannot claim any interest on refund. And if TDS is supposed to be done, it will be done at a higher rate. If TCS is supposed to be done, it will be collected at higher rates. And below point is something what I was talking about. Whatever consequences I told will start applicable from 1/7/2023 and will continue till the time PAN becomes operative by intimating Aadhaar. So if we don't link PAN with Aadhaar, PAN will become inoperative. And that consequences will start being applicable from 1st of July 2023. This is a very clear-cut provision given in the law with respect to linking of PAN with Aadhaar. And that is the story of the interesting amendments, what I wanted to discuss with you guys with respect to amendments in income tax, specifically applicable for November 2023 examination. And to summarize all the points what we have discussed in income tax, my dear friends, I'll go to the starting. First point I was talking about reimbursement of COVID-19 expenditure is not a taxable perquisite. And post that in other sources, my dear friends, if it is reimbursement of treatment expenses, that will be fully exempt. And if it is with respect to where a person has deceased and the family has got the money, and if it is coming from employer, there is no limit. Other than employer, the limit is up to 10 lakh rupees. And medical report or death certificate should clearly specify that death is on account of COVID-19. Then we have spent some good time on discussion about 194R, that is TDS in case of any benefit or perquisite which is arising in the course of business or profession, where we have got a limit of 20,000 rupees and TDS is done at the rate of 10%, my dear friends. I strongly believe that we remember all these points. Good. Where we discussed all the special issues also involved there. Then, after that, my dear friends, social media influencers and all I was talking about, where if the product is returned, then the TDS provisions will not apply. But if the product is not returned, then TDS provisions will apply. And if it is partly in kind, partly in cash, it is the responsibility of the person giving the benefit or perquisite to ensure that TDS is being done. TDS is being done or advance tax is paid by the person enjoying the benefit or perquisite. Good. And after that, my dear friends, in case of bonus shares, I told you it is not a benefit or perquisite. Then 206C1G, that is about liberalized remittance scheme of RBI and overseas tour package. These provisions will not apply if the person buyer is a non-resident and does not have PE in India. That is permanent establishment. And after that, I spoke about requirement of application for allotment of PAN. If you intend to deposit 20 lakhs or more, withdraw 20 lakhs or more, or you want to open current account, at least 7 days before the date on which you intend to do this activity, you have to apply for PAN. Then after that, quoting of PAN or Aadhaar number in case of cash deposit of 20 lakhs or more, withdrawal of 20 lakhs or more, or opening of current accounts. And finally, we spoke about PAN linking with Aadhaar. So these are the small, sweet, and cute amendments which have been done with respect to income tax applicable for November 2023 examination. I'm pretty confident and sure that you guys have got tremendous clarity on the amendments applicable for November 2023 examination with respect to income tax, my dear friends. Kindly please confirm. Once you confirm, I'll start with next discussion. Wonderful. Thank you so very much for your confirmation. Thank you, guys. Thank you. So now let me start discussion about the interesting amendments in GST, my dear friends, which are applicable for November 2023 examination. Now, what I've done is basically, my dear friends, I have actually prepared one interesting PowerPoint presentation with respect to GST because some interesting updates are there in the GST. So it is very important that students should have a clarity of thought on each and every amendment related to GST. And high probability that these amendments will generally trigger in the examination, especially because in GST, a lot of amendments come by way of notification circulars and all. And interestingly, my dear friends, this time in the statutory update of November 2023, my dear friends, they have given a lot of points which were already given for May 2023. Same points they have repeated once again in the statutory update, my dear friends. You're getting what I'm saying, everyone? So the same point they have repeated again in the statutory update of November 2023. But what are all the important, interesting issues? I ensured that I'll cover up once again in the form of presentation, my dear friends. And I'll share the link of that document also in the chat box so that you can download it subsequently. Yeah. Now I'll start opening the presentation, my dear friends, through which we can start discussion about amendments in GST, my dear friends. Let me share the screen. Yes. Is the screen visible for all of you? Please confirm. Come on, guys, is the screen visible? Please confirm. Once you confirm, I'll start the discussion. Yes, sir. Yes, sir. Yes, sir. Wonderful. Thank you so much, my dear friend. Thank you. Come on, let me start the discussion. We are talking about CA inter GST amendments for November 2023 examination, my dear friends. Now let's start looking at it. The first one, basic concepts, my dear friends. Levy and collection of GST compensation cess. I'm sure you guys know that GST is a destination-based consumption tax. Initially, we had a concept of VAT as well as CST. For intrastate sale of goods, VAT was levied. For intrastate sale of goods, CST was levied. Originally, we followed the concept of origin-based taxation, but GST is a destination-based consumption tax. The moment we shifted from origin-based taxation to destination-based tax, there were some states basically who have lost revenue on account of introduction of GST. Now, in order to compensate the states who have lost revenue on account of introduction of GST, they had to introduce something called GST compensation cess, which is being levied on some products like motor vehicles, motor cars, tobacco products, on all these products, luxury items, aerated waters, GST compensation is levied. Initially, they told they will levy like this for a period of 5 years. And 5 years got over by 30th June 2022. But subsequently, my dear friends, they have extended this till 31st March 2026. Till that period, they have extended this, my dear friends. Moving ahead to next slide. Amendments in definition of supply, my dear friends. Activities or transactions between a person other than an individual and its members or constituents for consideration is included in the scope of supply. In simple terms, if any service or transaction is undertaken between club to its members, between what, my dear friends? A club to its members, then definitely, my dear friends, between the club to members, they are regarded as distinct persons and the provisions of GST will apply. Everybody getting clarity on this point, all of us? Good, fair enough. Excellent, my dear friends. Thank you. Let me proceed. The person and its members shall be deemed to be distinct persons. That's what I told, club and members. And the supply of activities or transactions between them shall be deemed to take place from one person to another person. One more interesting point in supply. Perquisites. Perquisites basically in salaries topic in income tax, you would have heard about something called perquisites. Perquisites is a case which is concerned with actual expenditure incurred, where perquisite can come in any of the three ways to the employee. Number one, directly employer is providing facility to the employee. Number two, employer is paying to the third party. Number three, employer is reimbursing the expenses. Any of the possibility is there, and that is technically called perquisite. And they have clearly clarified that any perquisite which is provided in terms of contractual agreement, it is not liable to GST. The reason being, in Schedule 3, you would have heard about something called, in Schedule 3, you would have heard about something like this, where services by employee to employer in the course of employment is neither regarded as supply of goods nor regarded as supply of service. Dear friends, everybody. So they have clarified that any perquisite given, which is in terms of contractual agreement, that shall not be liable to GST. In the same manner, my dear friends, perquisite provided by the employer to the employee in terms of contractual agreement is only not liable to GST. But if it is not in terms of contractual agreement, then definitely GST provisions will apply. In that, there is no doubt, my dear friends. I strongly believe that we got this point, my dear friends. Good, fair enough. Let me go ahead. Thank you. Charge of GST, manufacture of fly ash bricks, fly ash blocks, building bricks, bricks of fossil means, earthen or roofing tiles are also not eligible to opt for composition levy. In fact, this point is not an amendment specifically for November 23. This was already there as a part of amendments in May 23 itself. But I brought this into PPT once again so that you will recall the concepts. Anyways, pan masala, tobacco substitutes, ice cream and other edible ice, whether or not containing cocoa, these aerated waters, these guys anyways cannot composition scheme. In the same way, composition scheme cannot be taken even by a manufacturer of fly ash bricks, fly ash blocks, aggregates, bricks of fossil means, similar siliceous earth, building bricks, earthen or roofing tiles. Even those guys cannot take composition scheme if they are manufacturer of those goods. Next point. Services by renting of residential dwelling to a registered person is chargeable under RCM. So generally, I'm sure you know the concept that if a residential dwelling is given on rent for residential purpose, it is actually exempt in GST. If a residential dwelling is given on rent for residential purpose, it is actually exempt in GST. But in case of renting of a residential dwelling to a registered person, that is taxable under a reverse charge mechanism. Renting of a residential dwelling to a registered person, that will be taxable under reverse charge mechanism, my dear friends. And this amendment is not a new point. This is already there for May 23. Majority points are already covered in May 23, guys. But I'm discussing again so that we will recall all the points once again. Next point. In case of GTA, what is that GTA? Goods Transport Agency. Supplier may opt for a forward charge instead of RCM and can issue tax invoice at applicable rate of GST. And practically the rate of GST is 12%. More for your knowledge. Next point. RCM provisions as applicable when service is provided by central government or state government will also apply to parliament or state legislature and also to court or tribunal. That is, GST is paid by recipient under a reverse charge mechanism. What does that mean? If there is a court building which they gave it on rent, if there is a court building, I repeat one more time. If there is a court building which is given on rent to a business entity, that will be taxable under a reverse charge mechanism. Are we getting clarity, everybody? Friends, come on, please reply, all of us. Yes, let me look at the chat box once for the queries and then proceed. Yeah. Clear. Good. Fair enough. Sounds good. Good. One friend is telling, no, sir. What is that you are not clear, my dear friend? As I told you very clearly, like how when service is given by central government, state government to business entities covered under RCM, in the same manner, if service is given by court or tribunal, then that is also covered under RCM. That is what is the point, what I explained. That's it. Thank you so much. Next point. Exemption from GST. Service by way of renting of residential dwelling for use as residence, that is exempt. But except where residential dwelling is given to a registered person. That's what I just told you. And moreover, it is covered under RCM. And transport of passenger with or without accompanied belongings by air embarking from or terminating in airport located in Arunachal Pradesh, Assam, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, or Bagdogra located in West Bengal. So if I book one flight ticket from Hyderabad to Sikkim, there is no GST. Sikkim to Hyderabad, there is no GST. Provided journey is in economy class ticket. That is most important. Provided journey is in economy class tickets. But one point to be noted here, if the above supply of service was supplied by an e-commerce operator, like Make My Trip, GoIbibo and all, then it is not exempt and the tax on such service shall be paid by e-commerce operator. Are we getting clarity, everybody? Yeah, good. What is the doubt student is asking? So business entity means registered person also, sir. So business entity means registered or unregistered. Any person who is carrying on business or profession. He could be registered or may not be registered. Next point. Service by way of storage or warehousing of cereals, pulses, fruits, vegetables. That much is only exempt. Before that, we had so many points like indigo, jute flax, so many points were there. Now what is covered is only cereals, pulses, fruits and vegetables. That's it. And anyways, for warehousing of agricultural produce, we have got separate point of exemption, my dear friends. So not to worry. Next. Service is provided to central government, state government, union territory, for which 75% or more of the total expenditure is borne by central government, state government, union territory is exempt. For example, my dear friends, Shiva Teja is providing training to a central government department officers, for which payment is made to me by central government department. In that case, my dear friends, GST will not apply because I have given service to government in which 75% or more expenditure is borne by central government, state government or union territory administration. Next point. Service by way of clinical establishment. So generally we know that any service given by hospitals or private clinics is exempt. But if the room rent, what they are charging is more than 5,000 per day, then it is taxable. And this 5,000 per day, more than 5,000 per day, then it is taxable. But one special case is that even though it is more than 5,000 per day, it is still not taxable in case of intensive care unit or ICU or ICCU or NICU, that is neonatal intensive care unit for newborn babies. In that case, even though it is more than 5,000, still it is not taxable. Very, very interesting point, friends. This is an old amendment only of May 23, but you still should have a clarity. That's why I'm covering all these points. Next. New added exemptions. Service by way of granting national permit to a goods carriage to operate throughout India. That is also exempt. They have given national permit to a goods carriage. Next one. Service by Department of Post by way of postcard. By way of what? Postcard, inland letter, book post and ordinary post. Postcard, inland letter, book post and ordinary post. And envelopes are weighing less than 10 grams. Then only it is exempt, my dear friends. Next point, very interesting point. Imagine a case like this. Sir, Shiva Teja decided that I want to go to Dubai. Okay. And assume for a second, Shiva Teja is not an Indian guy. Shiva Teja is a foreign tourist. Foreign tourist means who generally does not stay in India, but who comes to India for a stay of not more than 6 months. Okay. Now, I'm a foreign tourist. One tour operator is giving me a service of booking one tour. Let us say 3 days in Dubai, 2 days in India. Then what law is telling is how much ever service is attributable to Dubai, that much will not be taxable. How much is attributable to India will be taxable. See that line? Tour operator service one second. Just a second, guys. Let me open that point once again. Yeah. Now it's visible. Perfect. Come on, see that point now, my dear friends. Tour operator service, which is performed partly in India and partly outside India, supplied by tour operator to a foreign tourist, to the extent of value of service related to tour outside India. And exemption will be based on what? Value into, whatever is the value of service, into number of days outside India. How many days it is outside India, divided by total number of days. And if it is less than 12 hours, we'll take it as half day. More than or equal to 12 hours, we'll take it as full day. or 50% of consideration, whichever is lower. Value into number of days outside India divided by total number of days, or 50% of consideration, whichever is lower. More than that, you will not get any exemption. A very, very interesting latest point, my dear friends. Moving ahead, guys, let's talk about the next point. So moving ahead, my dear friends. So what is that tour operator service, which I was talking about very clearly? Tour operator service, which is given to a foreign tourist, that will be exempt to the extent of value of tour outside India. And how do we calculate that exemption? Whatever is the total value into number of days outside India divided by total number of days, or 50% of consideration, whichever is lower. That much will become exempt. Good. I believe it is clear for everyone. Good, my dear friends. Thank you. Next point. Withdrawal of some exemptions. So many exemptions are gone. These are all old points only, but still I'm discussing because they're important, guys. Old point means May 23 amendments, not specific November 23. But still, please see, for your benefit, I'm discussing all these things. Services by a hotel, inn, guest house, club, campsite, by whatever name called, for residential, 1,000 per day or equivalent. Generally, when we book hotels for less than 1,000 rupees, it used to be exempt earlier, but now it straight away became taxable. There's no exemption at all. In the same way, in case of goods transport agency, there was some exemption called if the consideration charged for single carriage, that means vehicle wise, does not exceed 1,500, or per consignee, person wise does not exceed 750. If the vehicle wise does not exceed 1,500 or person wise does not exceed 750, it used to be exempt, but now exemption is gone. That means straight away answer is what? Taxable. Now there is no concept of 750 or 1,500 exemption. That's gone. Next. Services by RBI, service by IRDA, SEBI, Indian Railway Finance Corporation to Indian Railways, services by FSSAI to food business operator. That is basically FSSAI license they give for food operators. We know that, no, my dear friends. So all these services have now become taxable. There is no more exemption to them. Next. Services provided by GST network to central government, state government, union territory for implementation of GST. That is also withdrawn. Services by way of fumigation. Fumigation is where smoke is put to get away from insects. Services by way of fumigation in a warehouse of agricultural produce. Services by way of slaughtering animals, killing animals for food. Services provided by cord blood banks. Very, very important point. Cord blood banks are those banks when the baby is born, baby is attached to the mother's umbilical cord. They cut that cord and preserve that umbilical cord. And what they have given in the law is that services given by that cord blood banks by way of preservation of that stem cells. That service, it used to be exempt earlier, but now it has become taxable. Next. Service provided by operators of common biomedical waste treatment facility to a clinical establishment by way of treatment or disposal of biomedical waste. Even this used to be an exempted service, which has now become taxable, my dear friends. When I say biomedical waste, it is nothing but the syringes or injections or any kind of medical waste. There are some persons known as waste treatment facility operators. They will process this biomedical waste. It cannot be thrown wherever you want as a junk. So these are all the interesting exemptions which have been withdrawn. Are we clear till this point? Please confirm up to the point of amendments related to exemptions. Kindly please confirm, my dear friends. Yes, sir. Clear. Wonderful. Thank you so very much. Good. Your active participation is very important, my dear friends. Good. Next, my dear friends. Amendment in value of supply, where they have given that no claim bonus. Generally, insurance companies give this, right? No claim bonus in case where you have taken some insurance policy for a vehicle, but the whole year you have not made any claims. The insurance company keep giving some bonus. No claim bonus provided by insurance company is recorded in the invoice and can be reduced as per section 15.3a. And I'm sure you guys know what is 15.3a, my dear friends. Discount record in the invoice. 15.2 talks about inclusions to transaction value. 15.3 talks about exclusions from transaction value. In our exclusions, we have got 2 points. Number 1, discount record in the invoice. Number 2, discount given after supply is made based on agreement existing at the time of supply. And it is linked to the invoice and proportionate credit is reversed by the recipient. That point is given in 15.3b. Now 15.3a amendment is what? No claim bonus given by the insurance company is recorded in the invoice and that can be reduced as per section 15.3a, my dear friends. Next point. Input tax credit, some interesting amendment, which you know this point already, my dear friends. If recipient does not make payment to supplier within 180 days from the date of invoice, if recipient does not make payment to supplier within 180 days from the date of invoice, whatever credit he has availed proportionately, whatever credit is availed proportionately, that will be reversed or it must be paid to the government. Because if recipient does not make payment to supplier within 180 days from date of invoice, whatever credit he has enjoyed, he must pay that amount or reverse that amount along with interest. But he can reclaim when he makes the payment. But here the point to be noted very clearly is that if part amount is paid, then part reversal only is done, not entire reversal. That is interesting point to be noted. Other side of the coin, please see that also. In case of banking company and financial institution, my dear friends, they have an option to claim 50% of common credit and reverse balance 50% of common credit. However, they can't, when I say common credit, what does common credit mean? Credit related to exempted and also credit related to taxable. That's called common credit. However, they can't claim credit of ITC related to personal use. And of course, they can't claim credit of ITC related to block credit under section 17, subsection 5. Next line. One interesting rule, my dear friends. If supplier has filed GSTR1, what is GSTR1? Statement of outward supply. I'm sure you guys know very clearly that every month 2 forms are to be filed. Number 1, GSTR1, which is statement of outward supply. Number 2, GSTR3B. 3B involves payment of tax. 1 can be filed even without payment of tax, but 3B cannot be filed without payment of tax. So what they told in the law is that if supplier has filed GSTR1, what is that line, my dear friends? Supplier has filed GSTR1, but does not furnish GSTR3B. That means government did not get revenue so far, because government will get revenue only when GSTR3B is filed. If supplier has filed GSTR1 but does not furnish GSTR3B for the tax period till 30th September following the end of financial year, then ITC shall be reversed by the recipient on or before 30th November. And it can be reclaimed after supplier furnishes GSTR3B. That means unless supplier furnishes GSTR3B, recipient cannot claim input tax credits. If it's already claimed credit, what they're telling, if by 30th September, if supplier did not file GSTR3B, then you do one thing, whatever credit you have taken, reverse that credit. And you reclaim that credit when supplier files GSTR3B. Because logic is simple, GSTR1 is only a statement of outward supply, but GSTR3B is a return. 1 can be filed even without payment of tax, but 3B can be filed only after payment of tax. That is a beautiful point which you have to make note of. Next, my dear friends. Of course, my dear friends, input tax credit can be claimed only if the credit is reflecting in GSTR2B, and credit will come in GSTR2B only and only if supplier has filed GSTR1 within the due date. And generally the due date is 11th of next month. If supplier has filed GSTR1 within the due date, only then the credit will reflect in GSTR2B, and only then recipient can claim input tax credits. Next point, time limit for availment of ITC by registered person. in respect of any invoice or debit note pertaining to a financial year is extended up to 30th November of the following financial year. Once upon a time, the due date was still due date of September return or annual return, whichever is earlier. But the September story is now removed. What they told very clearly is that if a person has missed out claiming input tax credit in a particular month, he can claim it next month. Next month also forgot, claim it next month. And the maximum time limit is 30th November following the end of financial year or date of filing annual return, whichever is earlier. That is the maximum time limit within which input tax credit can be availed. This time limit is only for availment of input tax credit and not for utilization of input tax credit. Law cannot impose time limit for utilization. That's not correct, no. I'll utilize when there is output supply. This is only for availment, not for utilization. Get the logic very clearly. Next, date of issuance of debit note to determine the relevant financial year for the purpose of 16.4. 16.4 is maximum time limit. Debit note is a document given by supplier when there is increase in tax. When there is increase in tax, supplier gives debit note. When there is reduction in tax, supplier gives credit note. When there is increase in tax, supplier gives debit note. When there is reduction in tax, supplier gives credit note. For increase in tax, debit note. For reduction in tax, credit notes. Next amendment in registration. But before I get to that, please confirm whether we are clear till now, till all the amendments what we have discussed till now. If yes, then I'll proceed to next amendment. Please confirm. If there are any doubts, you can feel free to ask. Not a problem. Clear, sir, clear, sir, clear, sir. Wonderful. Thank you so very much. Let me proceed. Amendments in registration. Number 1, 40 lakh limit. We know that 40 lakh limit will not apply to pan masala, tobacco substitutes, and also to ice cream and other edible ice, whether or not containing cocoa. In the same way, they told that 40 lakh limit will also not apply in case of fly ash bricks, fly ash blocks, building bricks, bricks of fossil meals, earthen or roofing tiles. Even in case of these products also, the 40 lakh limit will not apply. That means apart from pan masala, tobacco substitutes, ice cream and other edible ice, whether or not containing cocoa, these points are also added to that list where 40 lakhs is not applicable. Clear. Thank you so much. Next. For the purpose of revocation of cancellation of registration, my dear friends, if registration is cancelled, we can apply for revocation within 30 days. And this 30 days can be extended to another 30 days by additional or joint commissioner, and can be extended to further 30 days by commissioner. So maximum period what we have is only 90 days. Initial period is 30. It can be extended for further 30 by additional or joint commissioner, and can be extended for further 30 by commissioner. Next line. Registration is liable to be cancelled if a composition taxpayer fails to furnish a return for a financial year beyond 3 months from due date. And any person other than composition fails to furnish a return for such continuous tax period as may be prescribed. And monthly return filer fails to file return continuously for 6 months. If you don't file continuously for 6 months, gone. He will cancel the registration. A person opting for QRMP, that is quarterly return monthly payment scheme, fails to file return for 2 tax period. It's as good as 6 months, but monthly you're not filing. Quarterly you will file because you are in QRMP scheme. So if you don't file for 2 tax period, then registration is liable to be cancelled. Make sense? Good. Next point, tax invoice, credit note, debit note, my dear friends. First one, very, very important amendment. Please do keep in mind. E-invoicing is mandatory for all registered business with aggregate turnover in any preceding financial year. Any preceding financial year starting from 17-18. If it is greater than 10 crores, then definitely e-invoicing is applicable. Now, student might get one doubt. So practically they made it 5 crores. No, sir. Yes. But for an exam, it is 10 crores. So please don't get yourself confused. It is 10 crore limit. And 10 crore in any preceding financial year, starting from 17-18. Next one. Government department and local authority are exempted from e-invoicing requirement. In the same way, SEZ unit, insurance or banking company or financial institution including NBFC, GTA, somebody engaged in passenger transport service, person supplying service by way of admission to exhibition of cinematography in multiplex game, Inox, PVR and all, they need not do or they do not follow e-invoicing, my dear friends. Good. Next point. And I hope you guys, all of you know that this concept of e-invoicing is only in case of B2B invoices, my dear friends, but not in case of B2C invoices. But in case of B2C invoices, there is a concept of dynamic QR code. And this concept of dynamic QR code is applicable only to that category of person whose aggregate turnover is more than 500 crores. And dynamic QR code is mentioned on the invoice, which has also got the payment details also, my dear friends. Clear? But see one line, no dynamic QR code is required on invoice issued to a recipient located outside India for supply of services where place of supply is in India and payment is received in foreign exchange. Dynamic QR code must contain payment details also, my dear friends. I mean to say payment links. By scanning that QR code, you should be able to transfer the payment. That's the whole idea. Not a great point as such, but in exam one time an MCQ has come. That's why I don't want to take a chance. This is not a new amendment. Again, let me tell you, not a new amendment. Next. Time limit for issuance of credit note in respect of a supply made in financial year extended up to 30th November following the end of financial year. Once upon a time, it was only till due date of return for September month, but now they extended till 30th November. And this is only in case of credit note, not for a debit note. Debit note, obviously they will tell you, please report in the same month itself. Because in case of debit note, government will get revenue. But in credit note, taxes coming down. That's why government is telling we'll give more time. And that too, you have time till 30th November following the end of financial year. Or date of filing annual return, whichever is earlier. Because after annual return is filed, you cannot change anything. That's the whole objective here. Next point. E-way bill generation is blocked. In case if you don't file returns continuously for 2 months, they will block facility of generation of e-way bill. That too, e-way bill is blocked only for outward movement of goods. Inward is possible, but outward movement you can't do. And in case of issuance of e-invoice, there is no requirement to carry physical copy of tax invoice. This is an interesting amendment, guys. And e-way bill is to be generated for transporting imitation jewelry. This point is a new amendment, specifically from November 23 examination. Because the reason is very clear that, in case of jewelry, there is no requirement of e-invoicing. In case of jewelry, there is no requirement of e-invoicing. That's why they have clearly clarified that for jewelry it is not required, but for imitation jewelry it is definitely required. Clear? Excellent. Student is telling that IRN is enough. Of course, IRN stands for invoice reference number, which is mentioned by virtue of e-invoicing. Next line. Payment of tax. Guidelines for disallowing debit of credit ledger. If you have balance in electronic credit ledger, sometimes this question came in exam for 2 marks, 4 marks, many times. Commissioner, if he has reasons to believe that ITC is fraudulently availed, he can disallow the debit of amount from credit ledger. Which cases he will tell? Simple. Credit is availed on the basis of invoice of issued by supplier who is not existing, and without actually receiving, he is taken credit. And credit is availed even though supplier has not paid tax to government. And the person claiming credit is not conducting business from registered place of business. The credit is availed by registered person without having any invoice or a debit note. Basically, if you observe, there is something called 16(2) conditions to claim input tax credit. If any condition is gone, then commissioner will tell that this input tax credit is fraudulently availed, and he will tell that I will not allow you to use this balance in credit ledger. And if it is not exceeding 1 crore, who will take action is DC or AC. Next, exceeding 1 crore does not exceed 5 crores, then it is additional or joint. Above 5 crores, principal commissioner or commissioner. That is the story of who are the officers authorized to disallow debit of use of credit ledger. Next one, payment of tax. 1, 2 small points. Please see that, my dear friends. Payment of tax deposit in cash ledger can be made from UPI IMPS as well. But practically this is not being implemented so far. But they brought a provision in the law that UPI IMPS also is possible. And there is a facility provided on GST portal to transfer any amount available in cash ledger under CGST Act to the electronic cash ledger of central tax or integrated tax of a distinct person. That means if Shiva Teja has got 2 GST numbers and in one GST number, there is a balance in cash ledger. That balance I can transfer from one GST number to another GST number because PAN is same, but GST number is different. That is what is called distinct person. And this transfer of balance and all is only in case of transfer of balance in cash ledger, but not in case of credit ledger. Now, student might be thinking that, sir, why there are more amendments in GST than in income tax? The logic is very simple because in income tax, amendments are done only by Finance Act. Only few circulars, clarifications will be given. But in GST is not like that. By virtue of notifications, law keeps on getting amended. That's why generally in GST, you find more amendments as compared to income tax. But if you don't pass in November exam and come to May, in income tax also you will find terrific amendments. But I wholeheartedly wish that you will pass in November itself. And you will not be studying that amendments for exam. Study the amendments only for knowledge. Yeah? Thank you so much. Good. Let me proceed. Next point. Interest. If credit is wrongly availed and utilized, then interest rate, they told earlier that at such rate not exceeding 24%. And the rate notified presently is 18%, my dear friends. So in case of ITC wrongly availed and utilized, the interest that will be levied will be 18% per annum, my dear friends. Next. Returns. Maximum late fees for annual return. This is not about GSTR 1 and 3B. I'm talking about annual return, that is GSTR 9, my dear friends. Wonderful. Please see that. If turnover does not exceed 5 crore, then the late fees is 50 per day. And friends, let me tell you, 50 per day is basically 25 and 25. 50 per day is what, my dear friends? 25 and 25. Or 0.04% of turnover, whichever is lower. Or 0.0% of turnover, whichever is lower. And if turnover is more than 5 crore, does not exceed 20 crores, 100 per day, that is 50 plus 50, or 0.0% of turnover, whichever is lower. And if it is more than 20 crores, 200 per day, or 0.5% of turnover, whichever is lower. You have to understand that this is late fees for delayed filing of annual return. Section 37, statement of outward supplies. If there is any mistake in GSTR 1, you can amend that mistake and you have time till next year, 30th November, or date of filing annual return, whichever is earlier. And let me tell you one interesting point. If you don't file previous month GSTR 3B, you cannot file current month GSTR 1. Very practical points. Getting my point, everybody? Without filing 1, we can't file 3B. Without filing 3B, we can't file 1. Next point. If there is a difference between GSTR 1 and GSTR 3B, generally both should match. But if there is a difference, my dear friends, taxpayer will be intimated to explain the difference or pay the differential tax. You please tell why there is a difference or pay the tax within 7 days. And thank you so very much. And that is the story of this interesting and wonderful amendments what we have got with respect to GST. And strictly speaking, if I had to tell you only November 23 amendments, hardly 2-3 points are there. But I had to discuss May 23 amendments also for a simple reason, because ICAI in statutory update, my dear friends, of November 23, they have also covered amendments of May 23. And that is the reason why I discussed all these points. And I strongly believe that we are fully clear with all these amendments, what we have discussed for November 2023 examination with respect to income tax and with respect to GST. Kindly please confirm that you are clear. Wonderful. Thank you so very much for your wonderful participation, my dear friends. Thank you. So friends, now without any delay, what we'll do is I'll start discussion about RTP of November 2023 examination. Especially some questions are very crazy and wonderful questions. So clarity of thought on those questions is very important. So let me spend some time on discussion about RTP, my dear friends. Let me download once. Just give me 1 minute. Yeah. Downloading the RTP, just 1 minute. The page is loading. RTP, intermediate, taxation, November 23. Excellent. Just 1 second, it is loading. Done. Finally, the page is opened. Let me share the screen now. Is the screen visible? Please confirm. Students are telling crystal clear with the amendments. Wonderful. Thank you so much, my dear friend. Thank you. Thank you. Good. Is the screen visible? Can I start the discussion? Are you all ready? Yes. Let me proceed, my dear friends. Please look at that. The first question is an interesting question. Please see that point very clearly. Mr. Shan, a resident age 42 years, is employed in an MNC in Gurugram since 2013. He submitted resignation on 31st July 2022 for starting his own business and gave a notice period of 1 month to the employer. So first of all, before I continue further, I'll tell you an important point. Whenever a case study based MCQ is coming, especially from income tax, you will find all the options as if all options are correct. But we should do approach right answer where we need to look at every point of the question very clearly and very carefully. And that is very important. And that will take some sweet time. He received the following emoluments from his employer for the period starting from 1st April 2022 to 31st August 2022. That means what? April, May, June, July, August. 5 months. He got basic pay, dearness allowance forming part of retirement benefits 10% of basic pay, medical allowance 5,000 per month, entertainment allowance 2,500 per month, commission 10,000 per month, employees contribution to RPF 7,500 per month. Employer contributed the same amount to RPF. I hope you guys know that employer contribution to RPF in excess of 12% of salary will be taxable. Next line. Interest accrued in RPF is 13%, 14,300. So interest accrued in RPF, if it is more than 9.5%, it becomes taxable. Clear? Let us write the story till this point first. Yeah? Come on. Hold on. Come on, friends. How much is basic pay, sir? Basic pay is 45,000 into 5 months. And DA is straight away 10% of basic pay. And 10% of basic pay will be 2,25,000 into 10%. And what else was there? There is something called medical allowance, which is 5,000 per month. So it comes to 25,000. Then commission, it is 2,500 per month into 5 months. Then employer contribution to RPF bracket in excess of 12% of salary. Now, what is 12% of salary? 12% of salary will be equal to 12% of 2,25,000 plus 22,500, because I'll consider basic plus DA plus commission if it is given as percentage of turnover. Are we understanding, my dear friends? Everyone? A student is telling we should control feelings, emotions while answering MCQs. Of course, my dear friend. No feelings and emotions, only sections and subsections. No doubt about it. Come on. How much employer contributed? He contributed 7,500 per month. So let me write here. Actual contribution is 7,500 per month into 5 months, which is 37,500. And the limit is how much? And the limit will be how much, my dear friends? 2,25,000 plus 22,500 into 12%. This is my limit. And my taxable figure will be 37,500 minus 29,700, which is working out to 7,800. 7,800. And that is the answer for employer's contribution to RPF. Are we getting clarity, everyone? Please reply, come on, all of us. Good. So till this point, we have done. Okay, let me go back to the question. Sir, once again. One sec. One sec. One sec. One sec. One sec. One second, my dear friends. I'm just sharing that screen. 1 second. Where is the question? Yeah, got it. Is the question visible for all of you now? Yeah? Now see the question. Let me continue. Yeah, next slide. What is going next line? Come on, see. In October 2022, he started the business of manufacturing of footwear under the brand name Comfort. He withdrew the entire amount from RPF in September 2022 to invest in business. He has employed 75 regular employees as on 1/11/22 at a salary of 23,000 per month. Wow! And they participate in RPF. So they're talking about something called 80JJAA deduction. In case of employment of new workmen, whatever salary we are paying to them, we get 30% deduction. And that deduction is available only for those who are subject to tax audits. Let us see whether subject to tax audit or not. For previous year 22-23, profits and gains derived from business is 51 lakhs and the turnover is 7 crores. And Mr. Shan received 12% of sales in cash. That means more than 5% of turnover is received in cash. More than 5% of turnover is received in what, my dear friends? Cash. When more than 5% of turnover is received in cash, what will happen very clearly? Tax audit will apply because turnover is more than 1 crore. And once tax audit is applicable, deduction will come under section 80JJAA. And 80JJAA deduction is 30% of wages, whatever salary we are paying to that employees. Clear, everyone? Good. Next point. On December 1st, 2022, he has purchased a house property for what value, my dear friends? For what value? Come on. for 90 lakh rupees for self-occupation by taking a loan of 45 lakh at 10% per annum on the same day. On that, he will pay interest on loan, which you can take deduction under section 24B. He has paid stamp duty of 6,24,000 on purchase of property. Whatever stamp duty we pay, my dear friends, we can take deduction under section 80C. But 80C has got a maximum limit of 1,50,000. These all points would strike your mind. These all points would strike your brain. That is what is important. If any point is gone, and you will get some answer. And that answer will match with some MCQ. And you will think that answer is correct. But it will not be like that. MCQs are very terrific. Sometimes all answers look like every answer is correct. Shan does not want to opt for provisions of section 115 BAC. Very good. Based on the above facts, choose the most appropriate answer to question number 1 to 5. Are we ready, my dear friends? Everyone, sir. Can I start the discussion? Please confirm. What is it they're asking first? What is the amount of salary chargeable under the head salaries? Okay. Let me compute. I'll open the Excel sheet. Compute the amount chargeable to tax under what they are asking, my dear friends, under the head salaries. Come on. If you look at it very clearly, so far already we have done the working of salary here. With this, I have got my figure of gross salary. This figure is giving my figure of what, my dear friends? Gross salary. Friends, everybody, please reply, all of us. Next. What is the standard deduction, my dear friends? 50,000 rupees. Friends, everybody, please reply, all of us. Come on. Are we getting clarity, my dear friends? But you have to observe that in the question, there is one more interesting point actually. That one more interesting point which is there in question is interest on RPF. And if you see in the question, my dear friends, in the RPF, they got interest of 13%, which is amounting to 14,300, my dear friends. Which is amounting to what? 14,300. When it is 14,300, interest on RPF will be 14,300 into 3.5 divided by 13. You got this language, no? Because whatever is in excess of 9.5%, that will become taxable. So it will become 3.5 divided by 13, which is coming to 3850. And this total is coming to 2,96,650, my dear friends. And that is a figure of my gross salary. Everyone? Or anything else is missing, please confirm. We have taken the figure of what, my dear friends? We have taken the figure of basic pay. We have taken the figure of DA. We have taken the figure of medical allowance. We have taken figure of entertainment allowance. We have taken figure of commission. Commission figure is considered. Commission figure has been considered, but entertainment allowance has not been considered. 1 second. And commission figure in the question is 10,000 per month. Commission figure is 10,000 per month into 5 months. And there is something called entertainment allowance in the question. And that entertainment allowance in the question is 2,500 into 12. Not 12, wait a second, into 5. So now my gross salary is working out to 3,46,650. And I reduce standard deduction of 50,000, my dear friends. Then income under head salaries. That figure is coming out to 3,46,650 minus 50,000, which comes to 2,96,650, my dear friends. And the answer is, in the question, if you look at, the answer is option A, my dear friends. Not option A, option C, my dear friends. That is 2,96,650. I'll again share the PDF to you for easy reference. Clear, everybody? Good. Next, what did they ask? Come on. Next part in the question. What is the amount of deduction available to Shan under Chapter 6A for assessment year 23-24? Let's compute that. Come on. What is the deduction available to Shan under Chapter 6A? Come on, friends. Come on. Let's do it. What is the deduction is going to get? Deduction under Chapter 6A will be, my dear friends, ATC, of course, 1,50,000. Then we'll also have ATJJAA. And what is ATJJAA? Let me look at number of employees. How much salary is paid is 23,000 per month into 5 months into 75 employees into 30%. 23,000 into 5 months into 75 employees into 30%, which is coming to 25,87,500. I hope you are getting clarity on this point, everybody. And total deduction under Chapter 6A will come to 27,37,500. Let me share the PDF to you once. 27,37,500. Where is that option? 27,37,500 is my option D, my dear friends. And that is the answer for question number 2. I hope it is making sense for everyone. Kindly please confirm. See how terrific it is. Yeah, good, fair enough. Let me proceed now. What else they're asking the question? Come on, please get back to the question. Please get back to the question. Come on. What is the total income of Shan for assessment year 23-24? Total income of Shan they are asking, right? Let me go back to the Excel sheet. Total income of Shan. What is total income of Shan? Already we have got income from salaries figure. Yeah. Income from salaries already we have got. Then income from house property will be, what is the loan taken, my dear friends? Let me look at the sheet once again. The loan taken is 45 lakhs at the rate of 10% per annum for 4 months only, because we took the loan in December. 45 lakhs into 10% into 4 divided by 12. And this figure 1,50,000 will be negative figure, my dear friends. Correct? No? Then income from business is straight away given in the question 51 lakhs. So my total income will work out to income under head salaries figure I have got plus this minus house property minus deduction under Chapter 6A, which is coming to 25,09,150, my dear friends. And 25,09,150 is option A, my dear friends. Let me share the screen. 25,09,150 is option A. Very, very brilliant question, actually. I'm sure this is making sense for everyone, sir. Excellent answer, actually. Where clarity of thought is very much required. Next one. Let me share the question and again look at the next question. Compute tax liability of Shan for assessment year 23-24. This is even more fantastic, actually. How do we calculate tax liability, my dear friends? First of all, normal tax liability, if you have to do, my dear friends, you will apply slab rates and calculate tax liability. That is always there. But, my dear friends, there is something called AMT, which stands for alternate minimum tax, which will come into picture in case of a person who claimed deduction under section 10AA or 80 QQB or 80 RRB or 80 JJAA. 80 JJAA. And what will be the adjusted total income, which is nothing but the total income, whatever you get, plus the deduction, what you have taken under 80 JJAA. Correct, my dear friends? And we will calculate AMT at the rate of 18.5%. And on this 18.5% is coming out to 9,42,880. And to this, my dear friends, we will add surcharge. Surcharge because total income is more than 50 lakhs. And when I add surcharge to this at the rate of 10%, my dear friends, surcharge 10%. Yeah. But the problem is there one point here. That is, sir, imagine for a second, if this would have been 50 lakhs. Friends, imagine for a second, if this would have been 50 lakhs, my dear friends. Come on, my dear friends, I repeat once again. Imagine for a second, if this would have been 50 lakh, what would have been AMT? AMT would have been straight away been 18.5%. Correct? No, which will be what? 50, 10, 000 into 18.5%. Surcharge would have not come at all. Correct, my dear friends? Now, what is the difference in tax? The difference in tax is 1,12,168. And the difference in income is equal to 50,96,650 minus 50 lakhs. So therefore, we get something called marginal relief. What a brilliant, brilliant question you have to understand, my dear friends. From that, I'll reduce something called marginal relief. Very, very interesting point. Marginal relief. Getting clarity, my dear friends? Marginal relief has come for a simple fact and reason that if extra tax is more than extra income, then definitely there is a concept of marginal relief, my dear friends, that will come into picture. And how much is the marginal relief I'm getting here? 15,518. And the balance figure will be 10 lakh minus 15,518. To that, I will add HEC, health and education, is the rate of 4%. And total tax liability is working out to 10,21,650 plus 4,08,000, 40,866. The answer is 10,62,516. And if we round up, my dear friends, we'll make it as 10,62,520, my dear friends. What a brilliant level of working is involved in this excellent question, my dear friends. I strongly believe that this question is making sense for everyone, sir. What a brilliant question. 10,62,520. Your answer is option C, my dear friends. A great level of working is involved. Are we getting clarity, everybody? Good. That is the power of multiple choice questions, my dear friends. Yeah? Good. Moving ahead. Compute tax liability of Shan for 23-24 if he opts for provisions of section 115 BSc. Assuming that figures of PGBP remain same. Simple question. If you have to apply 115 BSc, what will do, my dear friends? If section 115 BSc, there is no question of math, what will apply, my dear friends? Total income under normal. How much is the figure I got? Total income under normal, 25,09,150. Correct, no? To this, I will add back 80C deduction. I will add back 24B deduction. What is 80C I have claimed? 1,50,000. 24B what I have claimed? That also 1,50,000. Correct, no, my dear friends? 80JJAA will not add back because 80JJAA is allowed even in case of 115 BAC, my dear friends. Total is 28,09,150, my dear friends. Good. 28,09,150. How do we calculate tax, my dear friends? Come on. Up to 2.5 lakhs, 0. Then 2.5 lakhs to 5 lakh at the rate of what, my dear friends? 5%, which comes to 12,500. Then 5 lakhs to 7.5 lakh at the rate of 10%, which comes to 25,000. Next, 7.5 lakhs to 10 lakh at the rate of 15%, which comes to 2,50,000 into 15%. Next, 10 lakhs to 12.5 lakh at the rate of 20%, which comes to 2,50,000 into 20%. Then 12.5 lakh to 15 lakh at the rate of 25%, which comes to 2,50,000 into 25%. Then above 15 lakh at the rate of 30%, my dear friends. What is above 15 lakh? 13 lakhs, 13 lakhs, no. 13 lakhs, 9,150 into 15%. Into, wait a second, 13 lakh 9,150 into 30%. This is a total 5,80,245. To this, I will add HEC at the rate of 4%. Making sense? Or something is missing? Let me just confirm. I have taken the figure of total income as total income normally what I have got. And to that, what did I add back? I have added back ATC what I have claimed. How much ATC I have claimed? 1,50,000. And I also added back what, my dear friends? That is 24B what I have claimed, which is 1,50,000. Oh, wonderful. I should also add back something called standard deduction, my dear friends. Obviously, there's no doubt in that, because standard deduction is not allowed in case of 115 BSE, my dear friends, which is 50,000. So this figure is coming to 28,59,150. So this will be 2859. No, it will be 13,59,150. 13,59,150 into 30%. So final figure of tax liability is 6,19,054.80. 554.80. Correct, my dear friends? If we round off, we can take it as 6,19,060 as the final tax liability, my dear friends. I'm sure you realized what a power-packed MCQ it has been, which has got so much of concept with it. Did you enjoy this MCQ, my dear friends? Which is a case study based multiple choice question. And I strongly believe that we got full clarity on this. Please confirm. Good. Fair enough. Wonderful. Thank you so much, guys. Let me proceed, my dear friends. Next, come on. The major task of RTP is over. Next part you see. Kashyap, CEO of SHY Limited, purchased a BMW of 1.15 crores on 23rd September for personal use. Wow. On 20th February, he sold this car for 1 crore and incurred expenditure of 2.74 lakh for transferring ownership of the car. Compute the taxable capital gain or loss to Kashyap. CI numbers are given. All time pass. Answer is option C, nil. Because car is basically a personal effect. It is not covered in definition of capital asset. If it is not covered in definition of capital asset, there is no question of tax at all. Excellent. Next point. Mr. Sunil has filed return of loss for 22-23 on 31st July 2022 and received refund of 44,500. Enjoyed. And on 15th September, he would like to furnish updated return. Oh my God. And if furnish updated return of income for additional income, he would be liable to pay 57,000 towards tax and 6,700 towards interest. That means 57,000 is tax. Let me use calculator once again. 57,000 is tax plus 6,700 is interest. Correct, my dear friends? And already he happily enjoyed refund of 44,500. That also has to pay back to the government. Basically, they're asking about what is the additional income tax payable. Additional income tax payable is 25%, my dear friends. If it is filed within 12 months. Clear? Into 25%. So the figure is coming to 57,000 plus 6,700 plus already enjoyed refund of 44,500. It is coming to 1,08,200. 1,08,200 into 25%. It is coming to 27050. So answer is option A, my dear friends. That is the story of this question. Next part. XYZ Limited is engaged in manufacture of mobile phones with the brand name Just Say. Just Say, that's all. There are 5 dealers in Delhi and Mumbai to sell Just Say mobile phones. A dealer in Delhi receives 2 mobile phones and X Limited dealer in Mumbai receives 1 mobile phone from XYZ in Jan 23 on achieving sales target. Wow. It is something like benefit or perquisite in the course of business. Manufacturing cost is 15,000 while MRP is 25,000. The price charged from customer for such mobile phone is after providing 22% discount. That is what is important for us, because what price it is being sold to customers in the market, 25,000 minus 22% discount. So 25,000 into 78%. So in market it is sold for 19,500. And 2 phones are given to one dealer in Delhi. 2 phones means 39,000. Then TDS will apply at the rate of 10%, which is 3,900. And 1 phone is given to Mumbai dealer, which is 19,500. In that case, TDS will not apply, because TDS will apply only if the value of benefit or perquisite exceeds 20,000. If it is less than 20,000, there is no question of TDS under section 194 R, my dear friends. Good. This is what is the clear-cut points of MCQs, which I wanted to spend some good time, because questions, you have answers with you, that is not a problem. But MCQs, working, you don't have an answer, right? That's a bigger question. See now. Next question. Asha is an Indian citizen. She is a lawyer by profession. She started a consultant profession in 2019 with the name New Way Associates. In May 2021, she got married to Ram, an American citizen. And Ram came to India for the first time on 1st May 2020, when he joined MNC in India. He got promotion and was transferred to Dubai. He left to Dubai on 1st October 2021, and Mrs. Asha accompanied him. She also left. She started providing consultancy from there. Both of them came to India only for 3 months, from June to August. Wow. June 30 days, July 31, August 31. That means they came for 92 days. And Asha is an Indian citizen. Indian citizen coming to India for a visit, you should at least be for 182 days or 120 days if it is more than 15 lakhs income, total income other than foreign sources. Here it is 92 days. There is no question that Asha will become a resident. Clear, no? Asha cannot become a resident by applying section 6.1. But Mr. Ram will definitely become a resident by satisfying the second basic condition, 60 days or more during previous year and 365 days or more during last 4 years preceding the previous year. Next one. What is the income of Ram? Salary from company in Dubai, not liable to tax in Dubai. Obviously, it's not taxable in India because it's not actualized in India. Long-term capital gain on sale of shares of Indian company, taxable. Income from house property in Delhi, taxable. Dividend from shares of Indian company, that is also taxable. Next. What is Asha's story? Profit from consultancy profession in Dubai, which was set up in India, and it is not liable to tax in Dubai, 12 lakh rupees. Okay. Consultant profession in India, 3 lakh. Total together, 15 lakhs. Long-term capital gain on sale of shares of British company created to her Dubai bank account. This we will not consider. Long-term capital loss on sale of listed shares of Indian company, 42,000. So if you observe carefully, total is 15 lakhs. Total income other than foreign sources. So there is no question of applying the provisions of deemed resident under section 6(1)(a) also, because deemed resident will come into picture only when person is an Indian citizen and total income other than foreign source is greater than 15 lakh. So she is not a deemed resident and she is not a resident. So Asha is a non-resident. If non-resident, then only inner income will become taxable which is nothing but 3 lakh rupees. Only that much will become taxable. Next one. Explain with reasons the following statements are correct or incorrect. Akash, at 17 years, he received 3.5 lakhs as scholarship. Scholarship for education is straight away exempt under section 1016. It doesn't matter how much is coming, from whom it is coming. Next. Partnership firm is engaged in the business of operating goods vehicle and computes its income under presumptive basis under 44AE. Since income is under 44AE, no further deduction is allowed. Of course, 30 to 38 are deemed to be allowed, but we can still take deduction for remuneration, interest, salary payable to partners within the limits of section 40B. That is important. An interesting point in the question. Next. Third bit. Cash credit of 1.5 lakh were traced in the books of accounts of Yogesh, for which no explanation was provided. If no explanation is provided, then pay tax 60%. Such income is taxed at 30%. False, man. 115 PPE 60% plus surcharge 25% plus cess 4%. Effective rate 78%. Then Shyam is a salaried individual. He purchased a painting and sculpture from his friends Kamal and Ashish for 45,000, 35,000. Fair market value of painting and sculpture on the date of purchase was 80,000 and 60,000 respectively. And the difference between fair market value and consideration of painting and sculpture does not exceed 50,000 individually, nothing would be taxable. It is very much false statement because we will always see, my dear friends, aggregate. And the clear-cut question, aggregate difference is more than 50,000, then definitely it will become taxable. Next point. AB Light LLP, 2 partners with 60%, 40% share. As per partnership deed, eligible for internship 15%. But as per income tax, only 12% is allowed. And the firm is in manufacturing business. Net profit is given. Current year revenue expenditure, 100% reduction. Unabsorbed capital expenditure, reduce that. Brought for a business loss of 14, 15, 8 years is over. Unabsorbed depreciation, no time limit, reduce that. Current year depreciation, reduce that. Brought for a business loss, 8 years is not yet over, reduce that. Current year capital expenditure, scientific research, reduce that also. Clear, my dear friends? But what you have to do is that before you adjust the losses, you have to book the remuneration within the limits of section 40B. That is, first 3 lakh 90% and the balance 60%. You have to calculate that limit, take that extent of remuneration, then you will get the balance profit figure. And after you get that balance profit figure, then only you adjust your losses. That is important. Next point. Determine capital gain or loss on tax liability. On 12th December, 1,200 shares of Excel Limited were what, my dear friends? Listed company are sold by Vishal at 1550. 200 shares were sold at 1550. And STT was paid at the time of sale. Very good. That means section 112A. These shares were acquired on 25th May 17 at 425 per share by paying STT. 2017 it seems. That means we will say original cost or market value on 31st Jan 2018, whichever is higher. But that market value is subject to actual sale consideration. Highest price, average price, lowest price. Always we'll take highest price, my dear friends. That is nothing but 680. So we'll take that figure, determine the cost, and then compute the capital gains chargeable to tax under section 112A. Then Kabir, a resident, age 45 years, is owner of house which was purchased on 1st August for 19 lakhs. He sold the house for 24 lakh. Stamp duty value is 25 lakh 50,000. What is the difference? The difference is basically 1 lakh, and the difference does not exceed 10%. So in that case, we'll consider actual sale consideration only. The answer what I gave now is as per provisions of section 50C, my dear friends. Then next question is on deduction. He paid life insurance premium. Insurance policy taken in 2018, sum assured 220. If sum assured is 220, how much deduction you can take is only 22,000, but not 27,000. Obviously, my dear friends. We know that, right? Everyone, come on. Then he had written literary book. Royalty is 9 lakhs. 40,000 is expenses. Reduce that 40,000 expense. And from the balance, we can happily take deduction under 80 QQB 3 lakh rupees. His friends gifted a statue of goddess Saraswati to his daughter, Miss Dia, on successful completion of secondary school. Market value 65,000, that will be taxable and clubbed in the hands of parent. And the parent will get exemption of 1,500. He received gold chain worth 68,000 from his in-laws on the occasion of marriage anniversary. Marriage anniversary, my dear friends. Marriage anniversary is generally what? Taxable. But here you have to understand that it is coming from his in-laws. That means relative. It's exempt. He deposits 70,000 fixed deposit with SBI in the name of his minor son, and an interest on deposit 5,500. And that interest on deposit will take under income from other sources. Next, he donated 5,000 in cash to NGO. More than 2,000 in cash is not allowed. He has taken loan of 38 lakh for purchase of property of 45 lakhs for self-occupation. He repaid 1 lakh 80,000. Repaid means repayment of principal amount of housing loan will take ATC deduction. Out of which 1.5 lakh is towards 1.05 is towards principal repayment. That means balance 75,000 we will take under income from house property. Pretty interesting question and very comfortable question actually. Next point. Kashish, a resident individual is 62 years, is a medical practitioner. She runs her own clinic. Income and expenditure account is given. It's a total income problem. Salary figure, reduce and show under salary. Rental income, reduce and show under house property. Dividend income, show under income from where? Other sources. She is working as a part-time with 2 care hospitals. Her salary details are basic pay is given. Transport allowance is given. Then her son has undergone medical treatment in 2 care for free of cost. Medical treatment in 2 care hospital. That means what? Employer's own hospital. When it is employer's own hospital, my dear friends, what happens is very clearly it is not taxable. And before I continue, let me look at here interest on housing loan. I'll add back this and take under house property. Educational loan, add back and take under deductions. Then she owns a residential house. The reconstruction started on 1/4/22, completed on 30th/9/22. After reconstruction, ground floor is self-occupied by her, but first floor is let out. And both floors are equal area from 1/10/2022. So take the figures only for 6 months. Monthly rent is 40,000. And tenant also pays 3,000 per month as power backup charges. Power backup charges you show under income from other sources. You show under income from what, my dear friends? Other sources. Then she took a housing loan of 25 lakh from 1/4/22. Interest on loan is 120, which will definitely become what interest, my dear friends? That will tantamount to pre-construction interest. Is it so? Answer is no, because it is current year interest only. Correct? No, pre-construction is only when prior to financial year, not prior to date. And for the period 1/10/22 is also given. Municipal tax is also given. Municipal tax is allowed on payment basis, irrespective of to whichever year it pertains. Conveyance expense include 48,000 incurred towards conveyance from house to true care in relation to her employment. Getting clarity, everybody? So we'll add back in PGBP of conveyance expenses, my dear friends. Next point. Power and fuel expense include 10,000 incurred for generator. That will reduce income from other sources because that is where you have shown the income. 10,000 paid as municipal tax for the house. Administrative expenses include 10,000 paid as municipal tax for the house. What do you do, my dear friends? Municipal tax for the house, it seems. What do? We'll add back. Correct, my dear friends? Because municipal tax is allowed as deduction only in house property, my dear friends. Everyone. Next. Clinic equipment details are open WDV is given and purchase is made, which was made in cash. If purchase is made in cash, then there is no question of depreciation, my dear friends. And she also paid tuition fees of 40,000 for her granddaughter. No deduction. Granddaughter, what deduction will come? Next. She availed a housing loan of 25 lakhs from bank for higher education of her son. Higher education of her son, my dear friends. You can take 80 deduction for interest on loan. That's it. An interesting question, actually. Next one. Who is authorized to verify return of income of following assessees? HUF, If Karta is absent from India, then any adult member, need not be male always. Company where company is being wound up, liquidator will verify. Local authority, principal officer, my dear friends. Individually who is mentally incapacitated from attending to his affairs, then his guardian or any other person who is competent to act on his behalf. Guardian or any other person who is competent to act on his behalf, that person will be authorized person to verify the income tax return. I strongly believe that we are getting full clarity, my dear friends. An interesting RTP of November 2023, guys. That's it. And for theory part, answers are clearly given. You can go through that. Any doubts, you can comment there. We'll be more than happy to reply back subsequently. Not a problem. Next. Let me spend a little bit of time on discussion about GST also. Income tax, the first MCQ only took so much of time, but there was so much of content in that. See that. GST will not take much time, sir. The GST is always comfortable. Bali Bells, private limited company. See, intrastate outward turnover 40 lakh taxable, 15 lakh exempted. Intrastate outward 30 lakh taxable, 10 lakh exempted. So total aggregate turnover is 40 plus 30, 70. 70 plus 25, 95 lakhs. They sold land for 2 crores. Irrelevant. They purchased one heavy machinery in the month of September for 1 lakh. And they have capitalized the entire value of machinery along with the GST. Oh my God. And claimed depreciation on full value as well as on GST amount. If depreciation is claimed on full value, then ITC is not allowed. We know that, right? Then, Bali Bells has a tax invoice dated 25th July of last financial year with respect to inward supply of 50,000 excluding GST. And company has not availed ITC on the said invoice yet. Okay, you claim now. And you have time till next year, 30th November. Next. They distributed some free samples. Free samples, no ITC always. Basic price of the product is 45,000. TCS under income tax is never included in the value of supply. Clear, my dear friends? Next line. It received a subsidy of 3,500 from Bharat Foundation for usage of green energy. And subsidy was linked to the units of energy saved and not a aforesaid product. Then we will not add this because we will add only subsidy linked to the price. And linked to the product actually. Subsidy linked to the price from other than central government or state government is included in the value of supply. But in this question, subsidy was linked to units of energy saved and not to the product. So that is not included in value of supply. Bali Bells has not furnished annual return for preceding financial year till the end of November and will furnish in December of current financial year. Okay. First question, determine aggregate turnover. Already we know 95 lakhs. Option B is the answer. Bali Bells wants to avail ITC of GST paid on machinery in September. Is it possible, sir? No. No, since depreciation already claimed. Answer is option E. Whether Bali Bells can avail ITC on the free samples. Again, answer is no because it is a block credit as per section 17, subsection 5. Clear? Next one. Fourth question. Bali Bells can claim ITC on inputs received in July of the preceding financial year up to dash of current financial year. 30th November, we know the amendment. Compute value of supply. What is the value of supply? To this 45,000, we will not add this 2,500. We will not add this 3,500. So answer is 45,000 only. So answer is option A, my dear friends. See how much crazy options they give. That's what they try to play with you in the exam. And you have to be very, very careful. Next. Chill Limited Delhi, a registered supplier manufacturing machines, has made taxable supply of machine. Come on, what's the list price? 10 lakhs. Subsidy from central government. What do you do, my dear friends? Subsidy from central government is not included. Correct? No. Subsidy from NGO 2 lakhs. Add it. Tax by municipal authority. Add it. Parking charges. That also will add. List price is after considering both the subsidies. That is why subsidy from NGO is included. Further, company has provided following information pertaining to purchases made or services availed. Raw material to be received in April. No credit now. Claim in April. Membership of club availed for employees. Not obligatory. Again, it is block credit under section 17.5. Inputs to be received in 6 lots, out of which first lot is received. Gone. In case of goods received in lots or installment, credit can be claimed only upon receipt of last lot or installment. Trucks used for transport of raw material, happily claim credit. No doubt about it. Capital goods, out of 3 items, invoice for 2 items is missing and GST paid on those items is 282. So out of 350, 282 you can't claim. Balance you can claim is 68,000. Are we all clear, everybody, my dear friends? Please reply, all of us. Good. Next. 7th question, my dear friends. Eden Limited, registered under GST, is dealing in educational toys. Aggregate turnover 18 crores. Tax concern advised it to issue e-invoice mandatorily. However, they are of the view that aggregate turnover is less than threshold limit. It is not required to issue e-invoice. What nonsense. E-invoice limit is now 10 crores. They have to give. Next bit. Government department is registered in GST. Its turnover is 22 crores. Obviously, even though 22 crores, still it is not required because government department is exempted from requirement of e-invoicing. Next one. Batra Limited, a normal taxpayer, is winding up its business in Rajkot. Tax consultants suggested Batra that they have to file annual return or final return. What nonsense. They have to file annual return also, final return also. Both have to be filed. Annual return is GSTR 9. Final return is to be filed because registration we have applied for cancellation. And it is to be filed within 3 months from the date of cancellation or 3 months from the date of order of cancellation, whichever is later. And for your knowledge, annual return is in GSTR 9. Final return is in GSTR 10. And both of them have to be filed. Student is telling GST is always clear cut, sir. Wonderful, my dear friends. Happy to hear that, Jack. Good. Next point. Shamnath, a registered person, has caused movement of goods of consignment value exceeding 50,000. Wow. E-way bill. And thus generated e-way bill. However, after generating e-way bill, he found a mistake in e-way bill and wants to edit it. Not possible. Once e-way bill is generated, you can't edit it, but you can cancel. But that too you can cancel within 24 hours of generating, my dear friends. And after that, you can generate a new one. But you can't edit it, my dear friends. Editing option is not there at all. Next. Examine the implications of GST on payment of honorarium to guest anchors. Honorarium. So what? Still GST provisions will apply if their turnover, aggregate turnover exceeds 20 lakhs or 10 lakhs. 10 lakh for that Manipur, Mizoram, Nagaland, Tripura. Because GST will apply on supply of all goods, services, or both, unless they are exempt or unless they are covered in Schedule 3. If not, then definitely GST will apply. There is no doubt in that, my dear friends. Are we clear with this point, my dear friends? That's it. That is the story of our interesting concept of RTP of GST. And of course, RTP of GST has not taken much time because GST content is generally less, my dear friends, when compared to income tax. Because for November 2023 attempt, it is 60 mark income tax and 40 mark GST. But from next year onwards, from May 24, it is 50-50. And I wish that you do all that only for your knowledge. Clear, friends? So this session, we have spent so much of time on discussion about amendments of a November 2023 examination for income tax as well as GST. And we have also looked at RTP of November 2023 examination. And I'm pretty sure that we got good level of clarity on all these concepts, what we have done. And my dear friends, last but not the least, let me tell you, any doubts, anytime, feel free to get back. At Indigo Learn, we are always there for your support. You can feel free to post your query on the forum or comment on YouTube. We will definitely ensure that we'll reply as soon as possible. Dear friends, so with this, I would complete our discussion, my dear friends. And I wish you all the very best. And I wish you all success. And do come out with flying colors, my dear friends. Take care. All the very best. Shiva Teja signing off. Thank you so much. Thanks for your time. And thank you for your cooperation.